Hi friends, myself Subrata Mukherjee and you are viewing my channel Dr. Subrata Mukherjee Distance Learning in Commerce. I would like my viewers to subscribe my channel and see the playlist section of the channel to see the lectures that I have uploaded on accounts, costing, financial management and management accounting. Please give your valuable comments so that I can develop my channel for the benefits of students of commerce, and students can communicate with me through email that I have given in the description box. Today I am going to discuss how to prepare a store ledger under weighted average method. Prepare a store's ledger account from the following information applying weighted average method. A manufacturing company purchased and issued a certain material as follows. On January 1, purchases 600 unit at rupees 4 per unit. On January 4, purchases 300 unit at rupees 4.20. On January 6, issues 500 units. On January 10, purchases 700 units at rupees 4.40. On January 15, issues 800 units. On January 20, purchases 300 units at rupees 5 per unit, and on January 25 issues 100 units. So here is the structure of the store ledger that I have prepared, and within bracket I have written weighted average. That is the weighted average method we are going to apply in preparing the store ledger, and we are preparing the store ledger for the month of January 2022. So we have the first column, the date, then the receipt column, then issue and the balance. So on here we are writing 2022, and on January 1 there was a purchase of 600 units and the rate was rupees 4. So what is the value of the purchase on January 1? This is 2,400. So you need to find out what is the closing balance of January 1, the same amount. So quantity I am writing 600 unit, the rate will be 4 and 2,400 is the value of closing stock on January 1. Then on January 4 there was again a purchase of 300 units. So I am writing here 300 and the rate of purchase is 4.20. So the value of purchase on January 4 is 1,260. So what is the closing stock of January 4? You need to simply add up 600 and 300, which is 900 unit, and the value of the closing stock on January 4, you need to add up this 2,400 and 1,260. So 2,400 is the value of closing stock of January 1 and 1,260 is the purchase value of January 4. So you need to simply add up 2,400 and 1,260. So this value is 3,660. So what is the rate of this value 3,660? So this is 4.0667. So how I have arrived at this value? So I have simply divided 3,660 divided by 900 units. So this is the working I am doing for you. So next is January 6. So on January 6 there was an issue of 500 units. So on January 6 I am writing under issue column 500 units. So what will be the rate at which this 500 units will be valued? So this rate will be applied. So the rate at which we have valued the closing stock of January 4. So this will be 4.0667. So you can simply multiply this two column or these two figure. So the value of issue on January 6 will be 2,033.33. So what is the closing stock of January 6? So 900 minus 500 will be 400 and 3,660 minus 2033.33. So you will get 1,626.67. So the rate will be 4.0667. The same rate. You can simply check. You can divide 1626.67 by 400. You will get 4.0667. So again on January 10 there was a purchase of 700 units and the rate was 4.40. So the value of purchase on January 10 is 3080. So what is the closing stock on January 10? So 400 plus 700 is 1100 and the value will be 1626.67 plus 3080. So this will be 4706.67. So I have just added the value of the closing stock of January 6 and the purchase value of January 10. So 4706.67 divided by 1100 will give you 4.27879. So how I have arrived at this figure? I have simply divided 4706.67 divided by 1100 units. So this is the rate per unit. Now on January 15 there was an issue of 800 units. So on January 15 I am writing here 800 units and this rate will be applied. The one that I have calculated the closing stock of January 10, that is 4.27879. So what is the value of issue of January 15? This will be 3423.03. So now you need to find out the closing stock of January 15. So 1100 was the closing stock of January 10. This was the unit. Now you simply deduct 800 units from 1100. You will get 300 units. And the value of this closing stock will be 1283.64. You can simply subtract 3423.03 from 4706.67. You will get 1283.64. Now the next transaction is given on, okay, you need to find out the rate. The rate will be the same, that is 4.27879, the same rate, because there was no addition. Now the next transaction is on January 20. So there was a purchase of 300 unit at rupees 5 per unit. So the value of purchase on January 20 is 1500. So what is the closing stock of January 20? So 300 unit was the closing stock of January 15. You need to add up with the purchase quantity of January 20. So 300 plus 300 is 600. And the value, the closing stock, value of closing stock of January 15 was 1283.64 and the purchase value of January 20 is 1500. So if you add up these two figures, 1283.64 plus 1500, you will get 2783.64. Now you need to find out the rate of this 600 units. So this will be 4.6394. So rupees 2783.64 divided by 600 units. So you will get this rate, 4.6394. So the last transaction is given on January 25 and there was an issue of 100 units. So in the issue column I am simply writing 100 units and the value of this 100 unit will be 4. You need to multiply with the rate that we have calculated for the closing stock of January 20. So this is 4.6394. So the value of issue is 463.94. I have just multiplied this to figure 100 into 4.6394. So what is the closing stock on January 25? So 600 minus 100 is 500 and the value of this closing stock is 2783.64 minus 463.94. So this will be 2319.70. So you can simply find out the rate by dividing rupees 2319.70 divided by 500. So the rate is 4.6394. Try to present the solution in one sheet so you can see, and if you are viewing this solution in a computer then you can see it clearly. Thank you. Thanks for watching the lecture.